Finally, the wait is over. Hello, everyone. You asked for it in the comments, you sent me DMs, and today I am delivering exactly what you have been waiting for. Welcome to the most important video of this channel. Today, I am unlocking the three candle theory, a master level price action setup designed for identifying high probability buy and sell opportunities with absolute precision. This isn't just another pattern. It is a complete system that combines liquidity sweeps, volume confirmation, and trend alignment to give you a professional edge. We are going to deep dive into exactly how candle 1 sets the range, how candle 2 sweeps the liquidity, and how candle 3 validates your entry. So you stop getting caught into traps. I have put a lot into this because I know how much you wanted it. If this video gets a massive response, if you hit that like button, subscribe, and drop a comment below, I have something even bigger planned. If the engagement is high, I will release a dedicated deep dive video on our other major strategy, the inside candle setup. So, show some love to this video if you want that next one. Now, let's get into the details. Now, to make sure you fully grasp this strategy, I have broken this video into two parts. First, we are going to go through a detailed presentation where I will break down the exact rules, the candle logic, and the volume secrets you need to know. Once you have the theory locked in, we will move directly into a deep dive on the Nifty futures charts to see exactly how these setups play out in real time. Make sure you pay close attention to the PPT rules because the charts will move fast. Let's head over to the slides. So this one three candle theory buy setup. So here if you see valid buy setup is in the left hand side. What setup says? Candle 1 is a range setter, establishes the initial price range of the liquidity levels. Candle 2, the sweep, must sweep the liquidity of candle 1 by breaking below its low, but it must close above candle 1's low. See here, it has broke the candle 1's low by candle 2, and again it closed above candle candle 1's low. So many of you have asked me question where exactly candle 2 should close. So candle 2 should close anywhere above low of the candle 1, no worries. Even above high of the candle 1 is also fine, no worries. But it should close above the low of the candle 1. Even if it closes at exactly at the candle low price of the candle 1, then also it is fine. But it should be at at candle low or above candle low. It can close anywhere, no worries. And candle 3 is a validation, must respect the low of candle 2. Price should not break below candle 2's low. That is the important thing for candle 3. That's why it is a validation candle. Volume confirmation. At least one of the green candles in this sequence must have the highest volume, confirming the strong buying pressure. Remember this thing. This is the most important thing because you are going to take a buy trade. So green candle out of these three candles must have a highest volume. There is a possibility that sometimes it may happen all three candles are green. No worries. Then it is fine, then you don't need to check the volume. But sometimes whenever there is any red green candle combination, then you have to see highest volume should be in the green candle. Sometimes that also happens that all three candles whatever made are all green candles. That also happens. So don't there is no any rule as such that there should be at least one red candle in this setup. Okay, fine. Then for trend alignment, 20-50 MA must be trending upwards. This gives confirmation for a long trade. And yeah, as you one more important thing, that is a risk reward. I seen that this setup works very well in case of risk reward of 1 to 2. So we will follow 1 to 2 risk reward ratio. Here I have given a invalid buy setup also. See here, if candle 2, all conditions are satisfying, whatever satisfied in the valid setup. But if the red candle out of these three candles has the highest volume, then I will ignore this setup. Always remember this thing. For buy setup, in case of three candle theory, green candle must have highest volume. Otherwise, if red candle, if you see that red candle has the highest volume, then you should simply ignore this particular setup. Let's move to the three candle theory sell setup. So here, candle 1 is a range setter, establishes the initial price range and liquidity levels. Candle 2 is the sweep, must sweep the liquidity of candle 1 by breaking above its high, but it should close below candle 1's high. Okay, so it is okay if it closes exactly at the candle 1's high or below candle 1's high, it is fine. Even if it closes below candle 1's low, then also it is a valid setup. Fine, remember this. Then candle 3 is validation. This candle 3 should not break the high of the candle 2. That is the only thing it has to do. That is the validation candle. Now volume confirmation. Out of these candles, three candles, the red candle, any of the red candle must have the highest volume out of these three candles. So it confirms strong selling pressure. Okay. Then trend alignment. The 2050 EMA must be trending downwards. This gives confirmation for a short trade. Again, here also we will follow risk reward of 1 to 2. Here, all other, in case of invalid setup, as shown on the right hand side, all the rules are satisfied of candles, sweep, validation, everything. But the green, if the green candle has the highest volume, then you should simply ignore this particular sell trade. Because we are taking a sell trade, so we must have highest volume in the red candle. Fine, always remember this point. And here also, sometimes it happens that all three candles are red, then also it is perfectly fine, no worries. Sometimes there is only one green candle, two red candles, then also that setup is valid. Sometimes two green candles, one red candle. But if condition satisfies, then we should definitely take a trade. Now, many of you have asked about the stop loss criteria, so I am explaining here. In case of Nifty options, for option buying and option selling, whenever you are using this strategy on options chart, then your max SL per trade should not exceed 40 points. If it is exceeding 40 points, you should immediately skip that trade. In case of Nifty futures, max SL per trade should be 80 points. It should not cross above 80 points in any case. And for intraday stocks, max SL should be 1 to 1.2% of stock price. Remember this point, very important. As mentioned in risk management and positional sizing video, I have clearly explained that we should take only 5 trades with whatever total capital we have. So max trades open at any point should be 5, and total capital should be divided equally into these 5 trades. Max SL per trade should not exceed than 1% of total capital risk. Always remember this. If risk exceeds above 1% limit, skip that trade and look for the other stocks. Time frame for different segments. So if you are trading this particular setup on Nifty futures on option buying selling chart, then the best time frame is a 5-minute time frame, because capturing quick moves in Nifty's typical range bound environment, 5 minute time frame is the best. Also, in case of 15 minutes chart, they will give, they are too slow actually, because movement is very low in case of Nifty futures, in Nifty or Bank Nifty indices. That's why we may often miss valid entry signals. So that is why it is better to use 5 minute time frame for Nifty charts in case of futures and options. For stocks, yes, 15-minute time frame we should use, because in case of stocks we get strong directional trends, and a 15-minute time frame helps to avoid noise in case of stocks. Fine. So this is all about the rules of our setup. Before we dive into the charts, I want to share something from the heart. Gathering this data, backtesting the theory, and preparing the script and video takes an incredible amount of effort and late nights. I do it because I want to see you succeed. But honestly, your likes, subscribes, and comments are the only fuel that keeps me going. When I see you guys engaging, it's a huge motivation for me to keep sharing these high valued secrets for free. So, if you appreciate the hard work behind this video, please take a second to hit that like and subscribe button right now. It truly helps the channel. Now let's move to the charts. So here I will explain the three candles setup on Nifty futures charts. Okay. So see here. We will see all kind of valid setups, invalid setups. We will definitely look here. Now please uh, watch it carefully. Here, if you see, there is a three candle setup form. First candle, second candle, and third candle. Okay. Here, if you see, red candle has the highest volume. See, sorry, first candle, second candle, and third candle, right? 1 second. Sorry. Green candle is the first candle, red candle is the second, and third is a again a green candle. So here, if you see, red candle has the highest volume, and 20 and 50 ms are also in the downtrend. So I will definitely take this particular trade with a risk reward of 1 s to 2. Here we get a 1 s to 2 risk reward. Okay, we can see by naked eyes that we got a risk reward of 1 s to 2. Then see where is the next setup. No, here it is, the setup is formed but not. No, green candle has the highest volume and low also not broken. Hmm. Oh, there is no setup for today. There was only one setup form. But just imagine if you took that trade, then their stop loss was almost around 251 prices, 25 251 low, and 25 311 high. 1 second. 251 311, almost 60 points stop loss. So you would have got 121 125 points of profit in this trade, and you have to take only one trade. Now let's move to earlier days where the setup is formed. So if you see here, that setup is formed first candle, second candle, third candle, but low has not broken, right? And high of this candle broken. So this setup is not valid now, because high of the second candle has been broken by this green candle. So now we will again look for the another setup. So see where you are getting that setup. Here you got that setup, first candle, second candle, third candle, right? But I guess again green candle has the highest volume, so I will not take this trade. See here, volume is high in case of green candle. 60 sorry 6, where it was, here 68, 65, 64. So I will not take this trade. Fine, let's move to another setup. See here also that setup is formed, right? First candle, second candle, and third candle. So here I can take this trade at the low of this particular candle, and high will be the stop loss. Fine. So here I got a 1 s to 2 risk reward ratio. Again that setup has formed here also. First candle, second candle and third candle. So here definitely red candle has the highest volume in this candle, and second candle has broke the high of this candle. His high is 25,424.5. Its high is 25,425. So it has broke the high and closed inside below high of this candle, green candle. So I will take a trade at low of this candle and high will be my stop loss. Here I got a 1:2 risk reward. Great. So we are seeing where the setup is valid, where is the invalid setup. Both setups we are seeing here. So always remember this thing. You should capture invalid setups also where you should not take those trades. Fine. Here if you see, you must have get a setup here, right? First candle, sorry, this is the inside candle. Here it was a setup which setup was formed. First candle, second candle, third candle. But green candle has the highest volume. So I will not take a sell trade here. Fine. So this is invalid setup. Remember how to spot invalid setups. Now, where is the setup? Where is the setup? No, here also green candle has highest volume. So this setup is also not valid. Then no, there was no setup on this day. Here if you see, there was a perfect setup. Red candle, and green candle, and 20 m is also trending upwards, and 50 m is trending upwards, and exactly 20 m also above 50 m just cross, right? So I can take a high trade at high of this particular candle. Low will be my stop loss. I have got a 1:2 risk reward here. Fine. Yes, here is a 1:2 risk reward we got. Now again, where the setup is formed. No, there is no setup. Yeah, here there is a setup. First candle, second candle, third candle, right? Here is the setup. But if you see, uh, 20 EMA is still above 50 EMA after this candle also. So I will ignore this particular setup because 20 EMA should be below 50 EMA. So we will not take trade here. Fine. Yeah, here is again setup form. First candle, second candle, third candle. So at low of this candle, we will take a trade. See here, all three candles are red candles, right? So it is perfectly fine. Even if all three red candles, we should take a trade in three candle setup. So here, I will take a trade at low of this candle. High will be my stop loss. Immediately, whenever low breaks, I will take a trade. I will not wait for candle closing. Remember this point. We will not will wait for candle close. We will take a trade in running candle. But here, if you see, no stop loss not hit. Low of this candle, if I took a trade, high above high will be stop loss. So at EOD we would have ended with a minor loss, but stop loss was not hit in this case. And 20 MA trailing was also not worked out, right? Because candle has not closed about 20 MA here. Let's see here. No, there is no setup. Here there was a setup, but red candle has the highest volume. If you see, red candle has highest volume, green candle has the low volume. So this setup is not valid. Here, no, there is a yes, no. Once again, yeah, there is a setup here. So if you would have took the trade here, your stop loss would have got hit right here in this trade. No, you would have not waited till stop loss because this candle closed below 20 MA. So at the low of this candle, you must exit the trade, right? As per the 20 MA trailing SL rule. So you would lose very small in this trade. Again, where is the setup form? Yeah, here also there was a setup, but your stop loss is hit in this case, right? So here was a minor loss day, I guess, on this day, but that is still perfectly fine because this was a very sideways market, I guess, right? So it is perfectly fine on such days to lose small, because losing small keeps you in the game. Always remember this particular thing. Okay. So where is the setup? Where is the setup? Let's check out. Yes, if I see, here is the setup form, right? First candle, second candle, third candle. Red candle has highest volume. So I will take a trade at low of this particular candle. Fine. High will be the stop loss. And I got a 1s to 2 risk reward here. Definitely I got a 1s to 2 risk reward. Fine. So see, whenever you are losing small, but whenever you are winning, we are getting a good profit. So this is the b- great part about the risk management rules and having a proper edge while trading in the live market. Here also there was a three candle theory setup form. You would have took a trade at high of this candle, low will be the stop loss, and you must have exited at in some profit. There is no 2 hour reward we received, but definitely we got a good profit here also in this trade. So this is how you need to look here also. If you see, very good trade you would have got. First candle, second, sorry, here is a red candle has highest volume, so this setup is not valid. But here you got a trade, right? First candle, second candle, third candle. Low will be the entry, high will be the SL. So 1s to 2 risk reward we got here, right? Again here you must have got another trade, 1s to 2 risk reward. First candle, second candle, third candle, right? Low of the candle you should take a trade, high will be the stop loss. Here also you got a 1s to 2 risk reward. So I guess these are some of the examples based on three candle theory setup. There are lot many examples you can study. I would request you to please go through the chart, any chart, Nifty futures chart, Nifty options chart, option buying, option selling, anywhere, anything. Plus even on stocks chart you should also see this particular setup. This works amazingly well on stock charts also, because I trade in stocks only. And that completes the deep dive into the three candle theory on the live Nifty futures chart. Okay. So as we have seen, when you combine the range setter, the liquidity sweep, and the validation candle with volume confirmation and also trend alignment, you aren't just guessing, you are trading with a high probability edge. I have now discussed every critical detail of this setup, the entry, the exit, the volume secrets, and how to spot invalid setups to protect your capital. However, I know that mastering price action takes time. If you still have any doubts, or if there is a specific part of this strategy you would like me to clarify, let me know in the comments right now. I personally read your comments and I am here to help you get this right. Now remember what I said at the beginning. This strategy is a game changer, but it's just one piece of the puzzle. If you want to see my next most requested setup, the inside candle strategy, it all depends on you. If I see a massive if I see a massive response on this video, lots of likes, shares and comments, I will know you are ready for the next level and I will release the inside candle video immediately. Thank you for your time. Thank you for your support and I will see you in the next video. Happy trading.